Three, two, one, roll the footage. Welcome back to the Strategy Sprints podcast. I'm Simon Severino, your host. And my guest today is the Chief Investment Officer for Birmingham Angels Cityside Ventures in Michigan. Welcome, everybody, David Weber.
Thank you, Simon.
Cool to have you here, David. You brought a ton of insights, both for the CEOs and for the investors listening right now. So I'm excited. And tell us a little bit, what are you currently up to?
Well, we started just recently a fundraise for the Great Lakes Angels Fund. It'd be a $10 million early stage fund to also put early capital into companies that might be some of the same companies that Birmingham Angels will be funding. We're true seed investors. Many of the deals we're looking at don't have to be just in Michigan, but they are normally pre-revenue early stage companies where angels are desperately needed to help them get that first capital and get to market. So we're in the midst of doing that, and also starting to launch SidePitch, our software for collecting deal information. It's a venture management system that allows entrepreneur systems, startups, and angel groups and stuff like that to process deals much faster so they can get capital faster and execute rather than keep chasing the money.
So tell us about your current fund. What's the size and who are you looking for?
It's a $10 million fund. The minimum investment one unit is $50K. I have to be careful with security laws. We're not openly soliciting funding right now this way, but it's going to be in early stage technology companies. That's all we do is just technology companies in a lot of different sectors, from wearable technology to SaaS models, B2B, life science companies, agri-tech, a lot of different technology sectors we've seen on our website. And it would be coming from just accredited investors and family offices that have the means to come into the fund and park their money there and ride in a fund like they would be in a VC fund. It's 3 to 5 years before there's an exit. So there's no liquidity until there's an exit, and then you share the upside of the exit.
And how is the atmosphere right now in your portfolio companies? Are they shocked about the pandemic? Are they excited about the growth opportunities?
A few of them have learned that it's a slowdown on getting the service or the technology into the marketplace. A few of them are well positioned that the pandemic is actually helping accelerate the need and application of their product and services. So it's a mix. All in all, because they're early stage companies, some of them are not in the market yet. So what's happening in the market's not affecting them. They'll be in the market another 2 years later, and hopefully the market will be a lot different. But the need of filling will still be there and be strong because of what's happening.
And what are you currently observing that you wonder about, that is surprising you, that you wouldn't have thought before March?
Yeah, we're pleasantly, not so much surprised, but pleasantly pleased that because of the market conditions with real estate, especially commercial real estate being very risky right now with high occupancy, not there. People are not going to buildings and building office space and stuff like that. So commercial real estate is not very attractive for an investment. The stock market's very fickle, and it's hard to understand what's going to happen there. So many people are seeing that this asset class of angel investing can be attractive for them because they can get 3-5x return and greater on their money and let it work over there versus some of the other markets where they're very questionable, where they be able to stay up with just a normal cost of capital and cost of living appliances. So we're finding more people are starting to look at this asset class as a good alternative for a new investment opportunity.
Your first CEO tip is about execution. Can you unpack that?
Yeah, I've served as a CEO in a few companies and been an officer in other companies. And my biggest recommendation on execution is really to assemble, depending on how large your company is that I'm speaking to in the way of the businesses on here, whether it's small LLCs, privately held, or whether they're publicly traded companies, is really surround yourself with either a board of advisors or board of directors that add value, or just not figureheads that look nice on your listing of who your advisors are, or board members are, but people bring real value. So that when you get ready to execute, you got some sounding boards. You want people with different industry experiences, like sales and marketing, operations and finance, and so on, as advisors. So when you get ready to say, here's my rollout plan, you're sharing it with them, not really asking them to do your job for you, but share what your thoughts are, and then they can help find holes in it. You want people who are going to find holes in what your thoughts are, rather than just say, well, that sounds good, and you go and execute, and they really didn't challenge it. You want people to challenge what you're thinking. So make sure you find those kind of people and put them on the board. If they're not adding value, find a way to replace them. Put term limits on them as well, so that they have to, serve a time, and you can get disposal of them easily because term limits if they're not doing the job. But really, execution is vital. I mean, all the startup companies we're investing in, we want to make sure they have a plan to go to market that we believe they can execute. And some of them have great technology, but they don't have anybody who knows how to deliver it to the marketplace. That's a real shortcoming. And established businesses, your model has to keep changing every year with the dynamics. Customer comes first. If you're not satisfying that customer in the way they want to get the product or service, you're going to be superseded by people that can.
Super excited about your second CEO tip, that is about why the CEO matters. But first, one word from our sponsors.
Hey, if you love what you are hearing, you will love our free masterclasses. Go grab them at strategysprints.com.
Tell us about the role of the CEO and what you would look for.
When we're making an investment, the CEO is probably 67% of the decision. The person that is going to be driving it we need to know that they have the drive in themselves, that they are going to look for ways to get around the wall and through the wall, not stop at the wall and ask for help. They have to be creative in solving problems. They have to have a history of showing the tenacity to stay with something and persevere. We don't want somebody who's just passionate about the work, but we want somebody that's driven to do the job and get it done, and understand that when they are raising money, they have other people's money. We're partners in your business with you. So you have to understand you're putting all our capital at risk, and your business decisions need to be sound, and don't be afraid to ask for advice, and then take it. And if you have a dispute with it, discuss it. Just don't ignore it. There might be something you don't understand, or they don't understand with the advice they gave you. So it's a two-way street.
I literally am picturing this wall in front of my eyes, and I see people who, when they see this wall, they just sit down and say, well, there's the wall. And then there are people who say, exactly, how can we get around it? Can we get over it? What can we invent? But they would never stop seeking. And this is true. This is so true. And you wouldn't think that a CEO could be any different, but there are. And if you have enough experience like you have, but also we are seeing in our programs all the time CEOs that get stuck and they just sit down and say, okay, I'm going to wait until the pandemic is over. And then you realize, that's not the way it works.
No, you have to keep looking for solutions, and ask for advice if you don't see them, and listen to the people that work for you. A lot of people think that people work below them, at least in a position in the company, cannot add real value. And some of those people can add the greatest value and tell you what's happening at their level. and what they're seeing in the market and among their peers in the company. They have great advice. So listen to everybody and then test things before you make a bold move. Test it, see whether it's going to work on a small sample. And if that works, then you know to, okay, then execute, make it a bigger plan.
You have also wrote 2 CEO tips for the investors. So on the investors side, how can we tap into the minds of others, the collective intelligence?
The greatest way to do that, I think, is to join a group of investors rather than being a sole investor, unless that was your only career is full-time investing. Then you get smart by trial and error. A lot of errors normally before you get that successful. But in a group, the group intelligence is great for looking at deals. And like we have a showcase about once a month. We bring companies to present virtually now, and our members in the group have a lot of different industry experiences from not only automotive but software, life sciences, all kinds of different backgrounds and different disciplines in that. And when they start asking questions, they ask it from their perspective and their personal background, stuff like that, that the other people on the call, on the Zoom, wouldn't think of. So that kind of group intelligence for looking at the opportunity on the business side with the technology, with the marketplace, with the hurdles I have to get through to get to the marketplace, all those things very valuable. So I would suggest investors get into an angel group. Some of the angel groups now can be members from around the world. We now have some folks from New York and Tel Aviv and stuff like that starting to join our Birmingham Angels because they don't physically have to be at the meetings anymore. They can do it virtually and sign on to the meetings and see the deals and invest in them remotely, obviously. In the fund, we would be making the fund decisions for people, but the nice thing in the fund is rather than cherry picking every deal on your own, as you come across, the fund would put you in 20, 30 deals or more over the life of the fund. So you're sure they get some hits out of that many deals to return the reward you're expecting with your investment.
Time for the strategy award. I'm curious who you pick. So you can pick only one person when everybody's thinking this person is sick.
Actually, one of the companies we just invested in here in Michigan is called Fix My Car. It is a startup that is hiring mechanics that are freelance right now because people are not going to dealerships for car repairs right now. It's so hard to book anything when you get there, all the restrictions and stuff. So they're taking advantage of the COVID pandemic right now. And the founder of the company spent like 2 years making calls on shops that are doing body work and service stuff like that, mechanics, and then has found that they're able to hire some mechanics that are not working full-time in the body shops anymore or the dealerships anymore because of the slowdown of people bring their cars in and have free time. Well, they can book time with this entity and they go to the people's home or office and fix it on the spot. It's fixed like the same day. And you don't have to call a dealership to make an appointment or a body shop, stuff like that. So he's getting a lot of business right now. They're launching in Texas. They're rolling out here in Michigan and some other states. And he's learned a good business model where the mechanics are making more money doing this freelancing than they are. Some of the people have left their job and they're now working with this company and they're selling it across the country. It's going to really catch on. His model is that he learned by spending a lot of time in the field, understanding what the issues are, and people want to have things done. Right now, you have to stay home pretty much. You're homebound. So if somebody come and do a minor repair to your car and get it fixed for you within an hour or 2 hours, the same day, same morning, or whatever, what a life savings that is to people. And it's a great opportunity to make some money based on what's happening, and it's a win-win. The end user wins, the mechanics win, and he gets a cut on every deal as well. So the investors win.
This is a wonderful example of how limitations make us creative. and even this might even be a model that stays also an interesting model post pandemic, because it's a lean model.
Yeah.
It's so much more resilient and viable. And
Well, there's that company that does replacing windshields, on cars, wherever you are at the time you want it, and stuff like that. And made a whole business around that. And the same thing can happen here. This can be a whole nationwide or international business where people just hire these people and come right to where you are, take care of your minor repair, and you're off and running. If it's a major repair, they've also partnered with people that can bring up a trailer, haul the car to the nearest dealership where it can, or wherever body shop needs to get done. But they'll take care of it with one call. Everything's taken care of for you.
beautiful. Your second tip for the investors is around the number of deals. Can you unpack that?
Yeah. The Wood Bank shows that in a table I can send afterwards, but it shows the more deals that you are in personally, the greater the opportunity to have a reward of like 3.5 or 4x return on your money. If you get above 24 to 30 some deals, you have closer to a 90% chance of getting at least a 3.5x return on your money. So that's where a fund really helps on that. Otherwise, if you're in a group, depending how much discretionary capital you have to spend every year, you might be able to do 2 or 3 deals a year if you put in 25 or 50K a deal into that. So it takes a long time to get that number of deals. Where if you're in a fund, one investment get you in all those deals for sure, and you don't have to cherry pick your deals. But the idea is the more deals under your umbrella, the better. That's what venture funds do, venture capital funds do. They do a lot of deals, and they know 9 out of 10 don't make it. The 1 out of 10 covers the rest of them. So we want to be in a lot of deals with our investors right now. Since September when we started Birmingham Angels till September of this year, we did like about 14 deals. That's remarkable in a group of our size, less than 20 investors have done that many deals. And so we know that some of these deals we're looking at right now probably have a window of maybe 24 months to an exit, because we found something that's really hot, and we got in early. So it's always good.
What are books or audiobooks that touched you recently?
I just recently picked up this book here. I'll show you. It's by the Drucker Foundation. It's called Organization of the Future. It was published in 1997, but as I'm reading it, it's very relevant now. And it's a really strong book on leadership and understanding what's happening to organizations as we evolve. I'm just started reading it recently, but I thought for the event today, it's a perfect book to bring up, especially for business people to read it, or even entrepreneurs if they'd like to read that, understand what's happening in the industry in the way of organizations and leadership and companies.
Beautiful. David, where can people stay in touch with you, read more about you?
There's a LinkedIn page. Look for David Weaver, LinkedIn, and find me there. Also, dweaver at citysideventures.com is an email. I'm glad to respond to folks if they like that. Or go to citysideventures.com as well. Thank you for this opportunity, Simon.
Absolutely. And who should be my next guest?
There's a local businessman that I met many years ago that's been very successful. He was managing a manufacturing operation in the area here. As you might expect in Detroit, it was in the automotive space, and grew that significantly, and then went on to acquire other different companies where he became majority shareholder in those companies, helped turn them around and sell them. He's still doing the same kind of thing right now. His name is Jonathan Rye, R-Y-E. I think he'd be a great person to speak to. He's got a tremendous track record, been very successful. He was got his sons who have been through U of M. University of Michigan to join him in his entrepreneur endeavors. And he's been a very good friend. He was on my board of Birmingham Angels, or excuse me, Great Lakes Angels when I started that in 2002. So it's been a very close friend, very successful.
Thank you so much, David, for sharing your wisdom and your experience and your journey with us. Stay safe.
All right.
Keep rolling.
Thank you, Simon.
Avoid trying to do thousands of things that doesn't work. We have 274 templates for your business success. Reach your ambitious goals with one-on-one sprint coach. We double your revenue in 90 days.